Ladies and gentlemen, you are experiencing to some degree a flash crash today. Nvidia stock hit a high of $974 per share. You were up 2 to 3% today, and now Nvidia's down 4% at $888 per share. You have almost dropped $100 per share in Nvidia stock. That is over $100 billion of market cap value that has been lost today. What's going on in our markets? Why have you seen this sharp U-turn and essentially a flash crash today, specifically in tech stocks? I guess there is a couple of different things that you could honestly point to. Number one, you could say the S&P and the NASDAQ have long been overdue for some kind of correctionary event. And as you are heading into the weekend, there's going to be a lot of risk coming next week, and it would make sense to see some de-risking of portfolios heading into next week. Just for a little bit of context, on Tuesday of next week, you have CPI data. Also on Tuesday, you have the SoftBank ARM lockup period. Now, that is going to be a big catalyst for AI stocks coming next Tuesday. We'll talk about that here in this video briefly, but a lot of people are talking about this report out from Microsoft, where Microsoft says a Russian hacking group is trying to crack into their systems. Some people are saying this could be having an effect on our markets today. And considering Microsoft is the largest market cap stock out there, this would be a big problem. Really, it is a big problem. Russians trying to get into Microsoft, but especially if they did, that would be a colossal problem. So maybe it's investors taking a little bit of risk off the table at this point, and I do think the markets are pretty vulnerable right now to bad news. Bad news can be seen as really bad news, but I actually think it's a little deeper than that. But let's briefly give you a rundown of this hacking situation with Microsoft. Microsoft on Friday said that the Russian group Nobilium has been trying to access its internal systems and source code repositories. Microsoft said that the cyber attack has been intensifying, with some tactics like so-called password sprays increasing dramatically. Microsoft first said in January that it had detected a cyber attack from Nobilium, which saw the Russian group hack emails from top executives. So nothing apparently so far has been fixed, and no systems have been compromised. But with this attack increasing, I mean, if they are, that's a huge problem. We also had some data that came out today with your non-farm payroll report as well as your unemployment rate. And it wasn't exactly a good report, let's just call it that. You came in at 275,000 job ads for the month of February. The estimate was about 200,000 job ads. So that was higher than expected. But last month, you came in at 357,000 job ads, at least initially, and you were just revised down to 229,000 job ads. That was over 120,000 job ads that were lost from last month. So really, is the economy, is the labor market as strong as a lot of people think? Probably not. The unemployment rate also jumped from 3.7 to 3.9%. And that's one of those scenarios where, sure, it might be a little bit of good news for the Fed, and maybe the Fed can actually start cutting rates sooner. But remember what happened in 2022? Right? 2022 was a very bad year for the NASDAQ, for the S&P, for the broad markets, not because the Fed was raising rates necessarily, but because when the Fed raises rates, it increases the odds of you guessed it, recession. And this data shows you just got a lot closer to a recession than most people were expecting. And again, I will point out the expectation for the unemployment rate was to stay the same at 3.7%. So that was quite a jump to the upside. Not the highest level that we have been at, but you're right there at the highest level we have been at in a while now. Okay. Now, when you actually look into the jobs report as well, it's definitely not as strong as a lot of people think. Here's this post from EJ Antoni on X. He says, we're back to hemorrhaging full-time jobs. All the job gains gained last month were likely part-time. 51,000 full time was negative 187,000 from January to February. So full-time jobs lost 187,000 jobs. Part-time jobs added about 51,000 jobs. So you're definitely losing jobs out there, and people are just not able to find as much full-time work. Sure, is there part-time work out there? Of course, but that's definitely not, helping the average person to pay their bills, to get out of debt. And maybe that's one of the big reasons why delinquencies continue to grow. And take a look at that. Nvidia is trending on StockTwits because it is literally trading like a penny stock. The sentiment today, surprisingly, is bullish at 67. Yesterday, it was bearish at 43. So some people looking to buy the dip, as this could be an opportunity to buy the dip. But when you see a sharp correction like this, it's typically not good. When you see a stock like Nvidia that has been red hot for a long time, and there's been a lot of money piling into the stock, it can lead to big drops like this, right? When momentum does finally go away, that is a powerful thing, because it's hard to get that momentum back without any kind of new information. And let's be honest, Nvidia has ran based on momentum, and it's very much disconnected to any fundamentals that Nvidia has. You are pricing in massive amounts of growth, and there's a lot of room for error with Nvidia's stock price. It's not exactly cheap, and it's not exactly a good deal. So once you get these algorithms as well that start to flip, and they start to go into, shorting the stock, selling the stock, that's a bit of a problem. I think a lot of people don't remember this, but 90 to 95% of trading volumes on any given stock on any given day are algorithmically driven, right? 10, 15% or so of the volume can be people actually buying the stock on a day-by-day basis. But a lot of this is just algorithms, quant trading funds, and programs that are doing the buying and the selling. When those programs flip, that can be a big problem. Now, I think this just goes to show you how much of our markets have been dependent on AI stocks like Nvidia, like your semiconductors. The NASDAQ hit a new all-time high today at $448.64 per share. You have fallen 1.5% from the high today. That is a big U-turn. And it's, again, going to take a lot to get that momentum back, let alone the catalyst that we have for next week. Now, SoftBank's lockup on ARM expiring on March 12th. That's going to be a huge catalyst that not a lot of people are actually paying attention to. So just to kind of put this into a little bit of perspective, SoftBank owns 90% of ARM outstanding. So they own about 929 million shares or so of ARM. Well, they're up huge, okay? They bought the company for $32 billion. It's still worth about $130 billion as of today. They were trying to sell the stock to Nvidia, the company to Nvidia, for $40 billion in 2022. They were willing to only take $8 billion of net profit on that deal. Okay, now on March 12th, they're able to start selling stocks. So there's only been 94 million shares actually able to trade hands. Now, let's just do some simple math here. There's only been 10% of the float that's able to trade. There's been a lot of demand around AI. The algorithms have been buying up AI stocks like nobody's business. Of course, the stock has went up a lot. Well, if SoftBank even sells a fraction of their position, literally a fraction of their position, out of 929 million shares, if SoftBank sells 1% of their position, SoftBank would sell 9.3 million shares. The average trading volume is 15 million a day since ARM has IPO'd. If you were to see 9.3 million sell orders come in on a single day, you would see ARM fall big time. Now, you could probably do the math and actually figure this out. If you have 94 million shares trading today and let's say you add another 9.3 million shares to that, you're going to be looking at roughly 10% dilution. So even if SoftBank sold 1% of their ARM position, you could look at about 10% more shares out there trading hands. So essentially 10% dilution to the float that is currently trading. I mean, that could send the stock down 10-15%. And that's just 1% of SoftBank's position. SoftBank would have to sell a couple 100,000 shares a day, maximum, to not have a large influence on ARM stock. Now, everyone knows the lockup period's coming due on March 12th, so this could be another reason why Nvidia and ARM and all these other stocks are also selling off. But if SoftBank wants to sell more than that, that's going to be a problem. I mean, if you look at 929.7 million shares that SoftBank owns of ARM, you times that by roughly $134 where the stock is currently at, that's $124.5 billion of value in their ARM position. SoftBank's entire company value is about $87.7 billion. That's never going to end well if you own a position that's worth that much more than your whole company's value. You can also make the argument, to maybe a lesser extent, that Marvell, Costco, Broadcom and Marvell being some of your high-flying AI stocks as of lately. I mean, Broadcom's down 6%, Marvell's down 9%, following really not AI spectacular earnings or guidance. Marvell was the worst of them. They actually guided lower. Broadcom just kind of came in line with expectations, but that's not good enough when these stocks are up big time. So that's also likely not having a positive effect on Nvidia and on the NASDAQ. But when you see a drop like this, that could set you up for an even larger fall. Now, the question is, where do markets go from here? I think it obviously depends what comes with the CPI report next week. On the same day, you have, again, the SoftBank ARM lockup period. Does that cause a larger sell-off in your semiconductor, your AI stocks? Do the algorithms sell off Nvidia, Broadcom, Marvell, Dell, Intel, AMD, all these other stocks in sympathy to ARM? Let's say ARM falls 10% next Tuesday on March 12th. Does Nvidia fall 3% because the algorithms are selling the stock? Well, possibly some of that anticipatory kind of selling coming next week is happening today as well. That would make sense. Or it just has to do with the hacks that, are taking place today with Microsoft and some other companies. It's really hard to pinpoint exactly what's going on, but you're definitely seeing a shift in momentum, which was in the beginning of the day very strong to the upside. At one point today, stocks were absolutely ripping. I mean, after the jobs report came out, you went higher, you opened for cash opening, and markets were up quite a lot. I mean, the NASDAQ was up about 0.7% or so today before it ultimately flipped from the highs about 1.5%. So we'll see what does happen next. I do think this can lead into a larger correction-like event as people are kind of forced here to take a step back and say, hey, are we just chasing? Is this FOMO? Does it make sense to be buying in Nvidia at, $900 per share? Or should we kind of wait and just let some of the profits ride? Again, 90 to 95% of the trading volume can be algos or, quant programs that are actually, buying and selling. So, do they also shift into more of a selling stance on these stocks? That could probably happen. And let's be honest, if AI was never a thing for 2024 so far, the markets would have not done as good as they have. Not even close. I think the S&P and the NASDAQ would be down 5 to 10% from where we are today. You can also make the point that with the S&P trading at about 515 at one point today, hitting a high of 518 for the SPY, you've priced in all of next year's worth of gains for the markets. The markets like to price out about 12 months. So you've priced in your earnings expectations fully for even 2025. So I don't really think there's a strong case for, the bulls here, given the momentum flip that we have seen today. Now, where does this all ultimately take the S&P? Let's look at the S&P first. This could take the S&P, in my opinion, back to the 50-day moving average. That would be a fall from the peak of the trading day today of about 5.25%. Now, that could pretty easily happen, in my personal opinion. That's kind of my base case assumption. I'm not expecting some kind of huge collapse here, but a 5% pullback from the peak would not surprise me. Now, could you fall even more than that? Of course. Could you fall 10%? Of course, especially if, SoftBank does sell a lot of ARM and that does trigger more selling in other AI stocks. You could definitely get a 10% pullback here over the next couple of weeks, and that could take the S&P back to about 465. Now, would I buy that pullback? Of course, you have to buy a 10% pullback in the markets, but you also got to look and consider what's going on with the data, what's going on with, inflation. We're going to get new information, more information over the next couple of weeks, and as long as everything's kind of looking good there, the economy's not going into a recession or the labor market's holding up, inflation's not, starting to spike even more, then I think you'd be safe to buy that dip. Obviously, safe's a relative word, relatively safe. I think it'd be a pretty good idea to buy that dip. Now, with the NASDAQ, I think you could fall a little bit more just because you've ran a little bit more. So my kind of base case assumption is for a drop of about 6.5%. That would put you back to the level that you were at the end of 2023. So give back a lot of basically all of your 2024 gains, especially if your AI stocks start to fall out of favor. Stanley Druckenmiller once said, and I'm going to paraphrase here, that, stocks can go up for a long time and they can get overstretched on valuations. But when that reset happens, it tends to happen quickly. So yeah, if that does hold true, then a reset could be, pretty short term, kind of a large short term pullback. And you might be seeing the start of that today with NVIDIA dropping almost $100 per share. Now, I do think the NASDAQ can ultimately fall about 11.5% from here. That could ultimately send the NASDAQ back to where you were at the high of 2021, early part of 2022 with the NASDAQ at about 465 or so. You could fall as low as what I could see about 450 on the NASDAQ. That would really fill this whole gap that you really seen ever since November. Not to your October lows, which were down here at about 407 on the NASDAQ, but about 450. You'd still hold some of your bottom, of 2023 October level gains. You'd still hold this area of the gains, but to reset back to this little plateau area before we really launched and took off here, that could also be a potential outcome. But I do think this is the start of a correction-like event. This could also be a larger correction in the NASDAQ. I would like to point out a larger correction in the NASDAQ, and that money that leaves NVIDIA or some of your other AI stocks could go into other areas of the markets, and that would make sense why the NASDAQ, the triple Qs, are down about 0.7% today, and the S&P is only down 0.06%. The S&P is doing much better because maybe that money just goes into other areas of the markets. That's a possibility as well, that maybe you just get a larger correction in the NASDAQ and the S&P kind of corrects a little bit. Maybe S&P falls 5%, NASDAQ falls 10%. That could also be a potential here. Let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a fantastic rest of your day, and I will see you in the next one.